Welcome back to Rekt Radio, the only show that looks at a market flatlining and sees a rocket ship refueling on the launch pad. I'm Sunny, and folks, the quiet strength in the air right now is absolutely deafening.
And I'm Cole, here to translate that. Quiet strength is what you call it when the patient's heart rate is so low you have to check if they're still breathing. While Sunny is listening for launch codes, I'm listening for a flatline. Let's get into the data before someone pulls the plug.
You're such a pessimist, Cole. What you see as a flatline, I see as the market achieving a state of perfect Zen-like balance. The momentum has cooled off, the frantic energy has dissipated, and we're left with the true conviction holders. It's a sign of maturity.
Maturity? Sunny, that's not maturity, it's exhaustion. A market that stops moving doesn't just decide to take a nap and wake up refreshed. It stops moving because the buyers have run out of money and conviction. This isn't a Zen garden, it's a car that's run out of gas and is coasting to a stop on the side of a very dangerous highway.
It's a strategic pause. The market is digesting the massive gains we've seen and building a powerful new floor. All the paper hands and tourists have been shaken out, and now the price is being held steady by people who understand the long-term vision. This cooling momentum is exactly what you want to see before the next sustainable leg up.
What I want to see is liquidity. What I am seeing is a market that is becoming dangerously thin. You celebrate the tourists leaving, but you forget they bring their cash with them. The data is showing that liquidity is thinning out, which means the marketplace is becoming fragile. It's becoming brittle.
Exactly. That's my point. Liquidity is thinning because the supply is being locked away by long-term believers. They're taking their Bitcoin off exchanges and putting it into cold storage. That's the ultimate bullish signal. It means there's less Bitcoin available to be sold. It's a classic supply squeeze in the making. When the next wave of demand comes in, and it will be chasing a much smaller pool of available coins. The price has nowhere to go but up, and violently so.
You are celebrating the removal of the market's entire shock absorption system. A thin market isn't a strong market, it's a volatile one. It means the floor you think is so solid is actually a trap door. In a liquid market, if a large player wants to sell $1 billion of Bitcoin, there are enough buy orders to absorb that sale without causing a catastrophe. The price dips, but it's orderly.
But there are fewer large sellers. The conviction is higher.
You can't know that. All it takes is one. In the thin, illiquid market we're drifting into, that same billion-dollar sell order doesn't just cause a dip, it causes a flash crash. There are no bids to soak up the supply, so the price just cascades downwards, wiping out every single person with a leverage long position. Your supply squeeze is a powder keg waiting for a single match. Every trader, big or small, is now at greater risk of getting completely wiped out by slippage on a single move.
You're focused on a hypothetical risk, while I'm focused on the demonstrated reality of a strengthening holder base. The thinning liquidity is a symptom of a much more powerful cause, unwavering belief in the asset. But I know how we settle these things. Let's remove our opinions from the equation and go straight to the impartial oracle. I'm pulling up the Bitcoin technicals on TradingView right now.
Oh, wonderful. Let's go consult the digital tea leaves and see what prophecy of doom or reaches they have for us today. What's the verdict from the great machine, Sunny?
The verdict is beautiful, Cole. It confirms everything I've been saying. The overall summary, taking all indicators into account, is a confident buy. Not neutral, not weak, a clear instruction. Buy.
A buy? That's it. Not a strong buy. After all your talk about a world-changing revolution, the best the chart can muster is a polite suggestion to buy? That sounds less like a revolution and more like a recommendation in a department store.
Let me finish, because you have to look under the hood. The real story is in the components. If you look at the moving averages, the indicators that smooth out the noise and show the powerful underlying trend, they are flashing a strong buy. That's the deep structural current of this market, Cole. It's the tide, and the tide is overwhelmingly bullish. It tells you that over the long term, the strength is undeniable.
The moving averages are a rearview mirror, Sonny. They are a lagging indicator that tells you how great the party was. It doesn't tell you that the music has stopped and everyone has gone home. To see what's happening right now, you have to look at the oscillators. What are those telling you?
They are telling us the market is in a state of perfect, calm equilibrium. They're sitting at neutral, and this is the most bullish combination possible.
Are you hearing yourself? How is that bullish? You have a massive divergence. The long-term trend indicator is saying strong buy, while the short-term momentum indicator is saying neutral. The train's engine has died, but because it was going 100 miles an hour a minute ago, you're claiming the train is still strong. I'm telling you we're coasting. The power is gone. That is a signal of profound weakness.
It is a signal of profound health. You have to be able to read the charts. A strong buy on the trend confirms the bull market structure is completely intact. We're still in the bull run. The neutral on the oscillators means the market has finished its cool down period. It's taken a breather, shaken out the weak hands, and is now coiling up with all that stored energy for the next explosive move. It's a coiled spring. The underlying strength is confirmed, and the momentum has reset. This is the textbook definition of a healthy consolidation before a continuation of the trend.
It is the textbook definition of a bull trap. It lures in optimists like you who are looking at the past, at the lagging moving averages. You see the strong buy and you feel safe. But the real-time picture, the oscillators are screaming that the buyers are exhausted. They can't even push the momentum into the buy zone. They can only manage neutral. They're fighting to a standstill, and in a thin, illiquid market, a standstill is the most dangerous position you can be in. It's not a launch pad, Sonny. It's a stalemate right at the summit, and the air is getting very, very thin.
That's all for this episode of Rekt Radio. I'll be here enjoying this beautiful, quiet, and strong consolidation, getting ready for the supply shock that will prove the bulls right. Don't get shaken out.
And I'll be here urging you to look at the dashboard, not just the rearview mirror. The momentum is gone, the market is fragile, and a stalemate at the top usually resolves in only one direction. Be careful out there. You've been listening to Rekt Radio.